Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the month of February. After a strong month for most markets in January, investors are wondering what's happening with the seasonal trends for the month of February. So let's dive right in. I'm going to be using my Thackeray's 2023 Investor's Guide for this part of the segment, a shameless plug for my new book. And let's dive in and take a look at the month of February on an annual average basis. Now, it's going to surprise most people, but the month of February tends to be one of the weaker months of the year. Yes, we are in that strong seasonal period for the stock market, that 6-month period from late October to early May. But nevertheless, February tends not to be a strong month. If we take a look from 1950 to 2021, the S&P 500 is ranked 11. So that means it's the second worst month of the year on average in that time period. And you can take a look here. On average in that time period, has been flat. So in this case, it's been up and down, but overall flat. And the NASDAQ also is fairly weak overall in this month, and the TSX Composite, and also to the Dow Jones as well. It's just something to watch out for, especially after we've had a strong month in January. We could see a little bit of softening in the market as investors digest the gains in the month of February. If we take a look here at the actual trend for the market, the S&P 500, and this is from 1950 to 2022 in this case, you can see here we tend to start with the first few days of the month, tends to be positive, and then a little bit of a pullback and sort of a bounce back up in the middle. And look at this though, in this case here, we're slightly below average, because we took into slightly below zero. That's because we included the 2022 year here. And you can see that, so really the second half of the month, we can see a little bit of a pullback here. Something to watch out for, and these are the daily average gains of the market, how frequently on a trading day basis, how frequently the market's being positive. You can see here that a couple days at the beginning of the month and sort of up and down, and then a little bit towards the end of the month, but nothing spectacular. So this is not a spectacularly strong seasonal month for the market. Now, we can see some large gains in February, of course. And if we go down here and take a look at, this is February from 2013 to 2022. Look at last year, the S&P 500 in this case was down. This is the second line here, was down 3.1%. It was positive the year before, negative in 2020, positive in 2019, negative in 2018, positive in 2017, negative in 2016, and then positive in 2014 and 15 as well. So, it's fairly mixed overall in recent years as well. And if we take a look at the sectors of the market that we can, the performance, and this is from 1990 to 2022. And if we take a look here on this here, we can see that this is ranked on average. So the highest average gain for the sector, and then ranking down to the lowest. You can see here energy is on the top here, but something to point out is energy has only outperformed the S&P 500 45% of the time, and this is from 1990 to 2022. So in other words, when it has done well, it has done very well, like last year as an example, and we saw it was up at 6.4%. So you can see some volatility here. The strong seasonal period for the energy sector starts in late February. Sometimes it can start in January. We have seen energy actually holding in here a little bit. Materials tends to perform well also in the month of February as well. Consumer discretionary, we've seen a little bit of bounce with consumer discretionary after just being pounded for so long relative to the S&P 500. The consumer discretionary has had a little bit of a bounce. Industrials and also consumer staples sort of makes it up here a little bit. But look at the bottom. We got utilities, telecom, healthcare. In other words, the defensive sectors tend not to perform well in this month. So it'll be interesting if we see these sectors outperform during the month. That means investors and the market sort of floundering around a little bit. That will mean that the sentiment is changing more towards the negative side. So just something to watch out for overall. And if we take a look here, some of the subsectors, silver tends to perform well during this month. The semiconductors also tend to actually perform fairly well as well. Metals and mining, steel. Let's jump right down to the bottom here. Biotech, pharma. In this case, and autos as well. Now, the auto sector can start to perform well later in the month, so something to watch out for. But the auto sector, we've seen some really strange reports coming out as far as pricing of cars, and we're seeing some weakness as far from that angle in that sector overall. So February. Not the best month of the year. Watch out here, and we'll go over some of these sectors and also some stocks as well. I'm going to go back to the beginning and here, January here. I'm going to flip over to a couple of the stocks. Now, I'm not going to cover them all. Here's Fastenal. I added this one to my 2023 book. I'm not going to go over Fastenal. If you want to take a look at it from a seasonal perspective, it tends to do well this time of the year. You have to actually make sure you just reference the book or buy the book and reference it. I do want to take a look at Toromont, which is the dealer for the yellow machinery, the Caterpillar machines. And from a seasonal basis, you can take a look here, January 31st until March the 7th. It tends to be a strong period. This trades on the Toronto Stock Exchange under the symbol TIH. And here we are here from January 31st until March the 7th. And you can see here that it's got a fairly strong track record, a positive 88% of the time, and an average gain in this time period, 8.7% from 1997 to 2021. Let's jump right over here and take a look at the monthly graph. This really shows you that here, the bar represents the average for Caterpillar, and the cross represents the mean. So both of these are high in the month of February. This is the real standout for Caterpillar. Now we can see April actually do quite well at the same time. You find a lot of the industrials and commodities. This is the commodity, but you find stocks that are related to some of the commodities, and commodities actually perform well in April. So right now we're in this period where it can perform well, and particularly in the month of February. So if we see the market positive, that could be something to watch out for. You can see here that Toromont from 1997 to 2021 in the month of February has been positive 8% of the time and has outperformed the TSX Composite in this case 84% of the time. And this is over the last 5 years. You can take a look here. The bar, the black dot represents the average for the Toromont. You can see here in February it's actually been quite good for this stock. And this bottom here, I'll just go down to the bottom here. You can see here this is the absolute performance for Toromont, and this is relative to the TSX Composite here. You can see it outperformed, then pulled back. Rallied and pulled back as well, and did okay in its next seasonal period as well. Actually has two strong seasonal periods, and the other one is from October 14th to December 14th. And you can see here that the February into March time period, late January into March, it outperformed the TSX Composite again. So let's take a quick look at the stock itself here. Here's Toromont here, trading on the TSX. In Canada, you can see here that on an absolute basis, really the stock has just gone over the last couple of years. From mid-2021, it's actually been fairly flat. Now that's actually fairly good news. It actually did okay. It was slightly negative last year in 2022, but it did hold its own a little bit there. But let's take a look at the strong seasonal period that we're in right now for Toromont. Let's just take a look at the month of February here. Look, outperformed the TSX Composite because this is relative to the TSX. And once again, it outperformed the TSX here. And now in this case, it actually went into finished up its outperforming the TSX in early March when its strong seasonal period ends. And in this case here, what we did see was, yes, it did outperform in its whole seasonal period as well in 2022. It actually continued on, and it can do that in April because April can be a strong month, and it was in this case for Toromont. Now the good news is we've been relatively flat. We've been consolidating relative to the market here, and on an absolute basis, the same pattern has taken place. So if we see a reasonable strength in the markets, it would be, the seasonals would really help support a tailwind for for Toromont at this time. So from a technical perspective, it's actually looking fairly good, and also too it has a strong seasonals at this time. Okay, I'm going to turn the page here. If we take a look here, this is Silver's on the next one, and it has a strong seasonal period from December the 27th into February the 22nd. And we are there right now. If we take a look at Silver here, we can see that January tends to be a strong month for silver. Look at February and March, though. We have the averages up and the medians down, actually negative. What that means is that there's a skew going on here. And so there's a few years that silver has performed well with some strong numbers, has boosted the overall average. So this is telling you have to be a little bit cautious, even though we are in the strong seasonal period. If silver has a strong momentum, it can do well in this time period. But on a median basis, it tends to actually underperform here. So you have to be a little bit careful with that as far as that goes. And we can take a look here in the month of February. Silver has only outperformed the S&P 500 well, in this case being greater than 0, 47% of the time, less than half the time, and outperformed the S&P 500 in this case 47% of the time. That's from 1984 to 2021 as well. Okay, let's take a look at silver here, and this is relative to the S&P 500 here. You can see in 2021, look at it, underperformed. It was negative. 2022, actually, we started off well and actually did okay in its strong seasonal period here. It was positive, and it did outperform the S&P 500 as well. If we go back to 2020, going into 2021, we can see that in this case here, it is actually positive as well. And in this case here, it was a little, and it was a little volatility around its end date, but it's approximately equal to the market. We did see silver actually perform extremely well on an absolute basis here, and it broke above its, in this case, its resistance point, and it's been going flat here, okay? So that's been consolidating. It's been underperforming the market is really because the market's been risk on, and, we've seen a little bit of a flood back into the NASDAQ and the tech stocks in January, and this has been the result. I do want to point out something, though, and I'm just going to clear this off here a little bit. And look at this. What's happening here is we've seen this flat performance for silver, but at the same time, we're seeing the RSI, Relative Strength Index, actually moving lower. That's a divergence. That could mean that we could see a little bit of a pullback in silver, particularly if the RSI continues to head lower, that the relationship gets stretched. Look, there's some long-term fundamentals, positive fundamentals for silver, and we're still in the strong seasonal period for silver, but this is just something to watch out for. We might see a little bit of weakness coming up. Okay, let's turn the page again and take a look. This is TJX, January 22nd to March 30th. This company has done well in that period over the long term, but the last few years, the company's been fumbling operationally. Segments of the market haven't performed particularly well. It'll be good to see this get back on track. If you take a look here for the TSX here, you can see this. This is from 1990 to 2021. February and March tend to be strong for this company overall, both on an average and median basis. But as I said, the last couple of years, we have seen a little bit of a stumble. If we take a look at the chart for TJX, this is the chart for TJX companies, and this is TJX versus the S&P 500. And you can see here that, if we take a look at last year's seasonal period, here was the end of January. And if we go in until the end of March, we can see here that it was negative, like most stocks were last year, of course. But it did underperform the S&P 500. But it did find some traction later on in the year, and it's been actually outperforming. Now, it's actually broken that trend line a little bit relative to the S&P 500, and we are seeing a little bit of a consolidation there. Now, once again, what we're seeing here is we're seeing on an absolute basis this flat performance are slightly up, and we're seeing the relative strength head lower at the same time. I'm going to try and draw this line all the way down. Well, at this point here is this point here. And so once again, we're seeing this divergence with the relative strength index. We are in the strong seasonal period, but just something to be careful with TGX because it's run up so much relative to the S&P 500. It's good to see it's getting back on its feet again, and it could perform well in a seasonal period, but we could see it actually finish up early this year, even if it does perform well coming up shortly. Okay, let's flip the page once again. And here we are, Snap-on. I added this to my book last year in the 2022 version as well. And I've actually got some comments on this. We are in the strong seasonal period. Just started for Snap-on from January 24th until May 5th. Look at this strong performance on average. 6.4% average gain and average gain is 6.4% and greater than 0, 78% of the time. That's from 1990 to 2021. And if we take a look here on the monthly basis, we can really see that the strong seasonal period really for Snap-on is in April. I mean, this is really where it is. The average is high. The median is outperforming the S&P 500 as well. So this is the tool business, and it tends to actually have a strong track record on a seasonal basis around this time period. Let's take a look at the graph and see how well it's done. Okay, so here's Snap-on here, and look at this performance, up, and then it's been flat, and let's go to 2022. Look at this. It was actually positive last year, which is great. In fact, it was getting close to an all-time high again for Snap-on. So it's actually done quite well relative to the market. You can see that it outperformed in 2022 as well. Let's take a look at the strong seasonal periods over the last couple of years. So here's in this case, we're looking from late January to 2020, the 24th of January, and we're going into May 5th. You can see here's May 5th right there. Look at that outperformance for the S&P 500. It also performed well. It actually turned down just a little bit after the strong seasonal period. And if we take a look once again, here we are January, and we're heading into May 5th, and you can see the outperformance. Now in this case, it was flat, but actually it was slightly up for that seasonal period last year in 2022. And it outperformed the market in a strong seasonal period and went flat again. And you can see here that we've actually been going flat relative to the market, and sometimes that's a good setup as well. For the company as you come into the strong seasonal period. And we are seeing higher lows here as well. So we are seeing this pattern take place, which is positive. So lots of good stuff with Snap-on, something to watch out for. Okay, let's turn the page again. Let's take a look at copper. Okay, so I added this, I think it was in the 2022 book I added this. It has a strong seasonal period from January 29th until March the 5th. Now, it can do well at other times. In fact, if we take a look here, really, this is a little bit of an anomaly because earlier I said that February tends to be fairly flat. This is from 1990 to 2021, mind you. You can see here the diamond is the S&P 500 in this time period. It's actually pretty close to zero. It's actually 0.1% in this time period. Remember I said earlier from 1950 to 2021, it was flat, but in the more recent times, it's actually been 0.1%. So let's call that flat. But look at copper here. We can see copper actually do quite well in this time period on an average basis and also on a mean basis as well. And that as well, March actually can perform well. But look at what we're seeing here is a little bit of a decline in the median. So the median actually underperforms the diamond here, which means underperforms the S&P 500. And but on average, it slightly outperforms the S&P 500. So it's a little more trickier from a seasonal basis in March. That's the strength really comes at the beginning part of it. Now, I gotta say, like I told you earlier, you can see some strong performance from some of the commodities in April. But once again, the median is actually, well, in this case, it's 0.1%. So let's call that flat. And the mean's actually below what the S&P 500 has done. So we can see this is really the core part of that seasonal trade as well. And if we take a look, we could see copper actually outperform. Now, China's opening up. There's some long-term positives as well for copper. It's an undersupplied commodity, et cetera. If the reality of a recession does come in a bit more, we could see copper struggle a little bit, but we do see that strong seasonal period at this time. Okay, let's go back and take a look at copper. This is copper, and this is copper relative to the S&P 500. Well, let's just take a look at the absolute here. You can see back in 2021, here's in January, and here's March. So it actually peaked just a little bit ahead of the end seasonal period and then started to correct here a little bit. So it actually did quite well and outperform the S&P 500 as well. If we go to this time period, there's actually two seasonal periods for copper. One's in the summertime. I'm focusing on the one that's relevant right now. If we take a look here for copper, once again, late January into March. Look at that. That was almost like a bang on to the day almost for the strong seasonal period. And then we saw copper actually go flat after that and then work its way down here. So in a strong seasonal period, though, it actually performed quite well on an absolute basis. So right now, what do we have? We're seeing higher lows here. We're seeing some of the commodities actually do quite well. We did see a breakout take place, and we've seen a little bit of a run up. That's quite a bit of run up here. So here's the danger a little bit. We do have the RSI here, the relative strength index, and it has become overbought. You can see that little green line, green area there above the 70 here. So we've got that overbought condition, and then we saw that back here, and in this case here, it very often represents a topping process. In this case here, actually, well, it took a little while to go there, but once again, we did see that pull back here. So when it's overbought on an RSI basis, severely overbought, you can see a temporary pullback as well. So at this time, really what we want to see is the market actually have some risk-on move here, in particular, which would help. Let's talk about the recession to boost this. So although we could see this copper actually perform well in a strong seasonal period, this is a little bit of a concern at this time. Okay, let's flip the page. Once again, Eastman Chemical. I love talking about Eastman Chemical. It has a strong seasonal period to the upside and the downside as well. You just have to be careful with the stock, at least in a week seasonal period for sure. If we take a look here from January 28th until May 5th, the stock from 1994 to 2021 has produced an average gain of 11.8%. It's been positive 82% of the time. But it has a weak seasonal period. And I want to bring this up because I put this in my book so investors get the full picture here. And in this case here, Eastman Chemical is a little bit different compared to a lot of stocks. It really has a strong, weak seasonal period. And that's from May 30th until October 27th. In the same yearly period as we just looked at here, it's produced an average loss of 4.9%. It's only been positive 39% of the time. Some of these losses in here are just huge as well. So you have to be a little bit careful with Eastman Chemical. If we take a look here at the bottom here, this is the chart from 1994 to 2021. Here's Eastman Chemical. Here you can see on average it tends to go up and then back down again here as well. And this is relative to the S&P 500, the same type of trend. So the good news is we've just started the strong seasonal period for Eastman Chemical. And if we take a look here, look at February here, the month of February tends to be strong. So the average here and then the median both tend to be strong relative to the S&P 500, which is a good performance. And look at the month of April as well. The median and the average relative to the S&P 500 tends to perform well in the month of April. But just to be careful, watch out, because we do see some weaker performance here, particularly on the medians here. So that transition can be a little bit tricky here. But it's just something to watch out for from that perspective. If we take a look at the chart for Eastman Chemical, here's Eastman Chemical. Here's the Eastman versus the S&P 500. Let's take a look at 2021. Here's January, late January into early May. That trade worked out well from a seasonal basis, and it was positive as well. But look what happened. Just after the seasonal period finished, we did see that downtick for Eastman Chemical. And then if we go to 2022, we can see in late January here into May, we did see some underperformance here. And so seasonal trades don't always work, and that's what you're doing is you're stacking the odds in your favor from a probability perspective, but it doesn't mean it's always going to work. And then because we saw the markets not perform well in that time period, and we saw the material sector get hit last year, and we saw this. It was very common to see this for a lot of the material stocks as well. But if we take a look right now, we can see here, let's just continue on with this line. We have a little bit of a breakout for Eastman Chemical. We are seeing some higher lows here as well. So this is all positive as we set up to start the strong seasonal period for Eastman Chemical. So something to watch out for. Okay, let's turn the page once again. And this is Adobe, a strong seasonal period from February 1 to May 23rd. I'm actually going to let you read up on this in the book, and I'm going to go right to the big trade that a lot of people are following, the energy sector. So let's flip over to that page here. The energy sector now, I'm going back to 1984 to 2021 in this case, and I'm using XOI here. And you can see here from February 25th until May 9th. You can see here that this is a strong seasonal period for the energy sector, average 6.1% gain, and it's been positive 78% of the time as well. Now, commodities can have some volatility even in the strong seasonal periods, and even in the results of the strong seasonal periods. You have to watch out with some of the commodities as well, and this does get reflected in the energy stocks around this time of the year, the oil-based stocks as well. And if we take a look here, this is the chart here on a monthly basis, same time period. We can see that it's really March and April. So here you can see in January, you can see that the average is up but the median is down. That means that there are, if we take a look, there are some spike months where the energy sectors actually perform well to pull the average up. But overall, on a median basis, it can be on the negative side. So this means it could have some opportunities to enter into the sector early. It's been holding its own recently, which has been a good thing. But really, you want to focus on these 2 months. In March and April. And April tends to be the strongest month here. Look at the gains. So this is an average. How often did it outperform the S&P 500? 72% March, 81% in May, which is some strong numbers overall. So right now we're still ahead of that strong seasonal period because I do have it listed here as February 25th to May 9th, but it can start early, so something to watch out for. Let's take a look at the charts for the energy sector. Okay, let's go back and take a look at 2021 here. We're using XLE in the States, and this is XLE versus the S&P 500. So late February into early May, you can see here that it was positive, and once again, here we are here. And it was really actually about flat there for that approximately. And then last year, 2022, this started in January and went all the way into June. So as you know, the end date for the seasonal period, I've noticed with the energy sector, it can finish in May. And on average, you really have to be a little bit diligent. But with strong momentum like what we saw last year, it will often spill over into June, and so we did see it do that last year. So the trade worked well. Got most of the trade actually right around here outperformed, and also too on an absolute basis as well. Got most of the trade here in this strong seasonal period. So where are we right now? If we take a look here, we're seeing higher lows. We are seeing right now we're really up against. We're formed this pattern here, a bullish ascending triangle. And really what we need to see is a break above this line here for the energy sector overall. It is, right now on a relative strength index basis, we have seen this moving higher, which is positive. The sector is actually being consolidating recently relative to the S&P 500 at this time. Now that's actually fairly good because we've seen a lot of the sectors in the market perform well, and the energy sector has participated in that at the same time. That's actually a good sign. Investors are still interested in this. This sector is setting up well from a technical perspective, and also it has a good seasonal tailwind coming up shortly. So what should we expect in the markets this week coming up? Well, from 1950 to 2021, on average, the February has been one of the weaker months of the year. In fact, it's actually been flat on average. It doesn't mean it's going to be flat this year. It'll probably be up or down. But we have seen the S&P 500 so far in January actually perform quite well. We've seen a real attraction to growth, the growth sectors of the market. Defensives have underperformed. That's actually good news. That's actually, so the market's followed its seasonal pattern from that perspective. But February, we could see a little bit of digestion for the gains for the market. Also as well, there's a real battle going on, and it's been out in the media a lot, where what you're seeing is the Federal Reserve saying we're going to hold rates high, we're going to pause, probably hold longer, we're not cutting, we're not talking about cutting. And investors go, well, we don't believe you. Unfortunately, the Federal Reserve has lost a lot of its credibility over the years because they say one thing and they do another, and investors just are saying, well, we're not sure if we want to believe you in this time around. But there could be some sort of reckoning there a little bit as well, something to watch out for if the Federal Reserve really pushes back on that. So I think February is a month where investors need to take a look at what's working, because there's a lot of sectors of the market and stocks that perform well at this time of the year, and take a look. The NASDAQ and the technology sector finishes up their strong seasonal period in late January, and so we're at that time period now, so we might see that rotation into the markets. Some of the other cyclical sectors of the market. I didn't talk about all those cyclical sectors. I didn't talk about the industrials and materials. All those sectors at the back of my book. You can take a look for yourself as far as that goes. But so far, there hasn't been any signs the market's about to fall apart. But things can change very fast as well. In this, we could see some volatility in February. Now, the good news is March and April tend to be strong months of the year, particularly for the cyclical sectors, and also too as well the commodities. So if we do see some sort of correction taking place in February, it could be an opportunity to actually to reposition a portfolio with those in mind. Thank you very much for joining me today.